Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock. With news, another major analyst has downgraded world growth prospects. But first, this morning the US Federal Reserve released the minutes of its last meeting in late January, the one where it confirmed its rate-rising ambitions. But these minutes show officials increasingly reluctant to raise short-term interest rates at their March policy meeting and possibly beyond. The key issues were stock market turbulence, China's dimming outlook, and indications that inflation could stay at low levels for longer than expected. Separately, the number of Americans filing for unemployment benefits unexpectedly fell last week, pointing to labour market strength that could keep the Federal Reserve interest rate hikes on the table this year. The OECD has downgraded its world growth forecast to 3% for 2016, the same level it achieved in 2015. It said trade and investment are weaker than expected. Sluggish demand is leading to low inflation and inadequate wage and employment growth. The downgrade in their global outlook since their previous one in November is broadly based, spread across both advanced and major emerging economies, with the largest impacts expected in the United States, the euro area, and economies reliant on commodity exports like Brazil and Canada. Compared with all this, New Zealand's current track looks quite good. They see China's growth at 6.5% this year, falling to 6.2% in 2017. China is moving to ease its fiscal policies, raising its deficit spending appetite. It had a fiscal deficit to GDP ratio of 2.3% in 2015 and expects that to jump to 3% in 2016, a level it acknowledges is a danger and a red line. But it needs to cut taxes, it says. It also can't help poking more funds into infrastructure projects. It approved 21 more in January, worth about $12.5 billion. In Australia yesterday, their January unemployment rate was reported at 6% on a seasonally adjusted basis, up from 5.8% the previous month and 6.3% in January a year before. But the actual raw data shows the rate jumping to 6.5% in January from 5.5% in December. It's a volatile labour market across the ditch. In New York, the benchmark US Treasury 10-year yield is higher by 2 basis points at 1.80%. That's in trading earlier this morning. Yesterday, local rate curves steepened and are likely to steepen further today. The US oil price is up slightly at $31 a barrel, while Brent is just under $35 a barrel. Not only are American inventories higher than expected, actually at an 86-year high, Iraq is following Iran and rejecting any commitment to the OPEC-inspired idea of an output freeze. The gold price is marginally lower today at $1,210 an ounce, and the New Zealand dollar is still trading in that narrow range, now at 66.3 US cents, 92.7 Aussie cents, and at 59.7 euro cents. The TWI will start today at 70.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.